Good day, and welcome to the Q2FY25 earnings conference call of CE Info Systems, hosted by DAM Capital Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anmol Garg from DAM Capital Advisors. Thank you, and over to you, sir.
Thank you, Muskan. Good evening, everyone. On behalf of DAM Capital, we welcome you all to Q2FY25 conference call of CE Info Systems, better known as MapMyIndia. We have with us Mr. Rakesh Verma, co-founder and CMD of the company, Ms. Sapna Ahuja, CEO of the company, Mr. Anuj Jain, CFO, and Mr. Saurabh Somani, Company Secretary. I'll now hand over the call to Mr. Verma for his opening remarks. Thank you, and over to you,
sir. Thanks, Anmol, and thanks to all the participants today evening who are attending the earnings call. Well, I'm Rakesh Verma, and let me take you through some salient features. I hope you have gotten a chance to look at the financials of the company, the press release, and the investor presentation. And further to that, I would like to start saying that MapMyIndia has received official board approval today to establish a joint venture with Hyundai Autoever, a wholly owned subsidiary of Hyundai Kia. MapMyIndia will hold 40% stake with a capital investment of $4 million. The joint venture named PT Terra Link Technologies will be based in Indonesia and will concentrate on providing map-based solutions for automotive OEMs and other businesses across Southeast Asia. Estimated revenue of JV would be the tune of USD multi-million dollars over the next 5 years, with order booking and revenue commencing from FY26 itself. This JV will also benefit current customers of MapMyIndia. Our Q2 FY25 revenue from operations increased to rupees 104 crore, a 14% year-on-year growth, and the first half of FY25, which is H125, saw a revenue growing to 205 crore as against 181 crore in H1 FY24. EBITDA for H1 FY24 reached 80 crores, yielding a margin of 39.1% compared to 78 crores and a margin of 43.2% in H1 FY24. EBITDA for Q2 FY25 was 37.5 crores, yielding a margin of 36.1% compared to 40.5 crores and a margin of 44.5% in Q2 FY24. Decrease in margin is primarily due to investing on a continuous basis during the last 4 quarters in consumer business for the future growth, and these investments are booked as expenses, resulting in downloads of Mappls app surging from 10 million in H1 FY24 to 25 million in H1 FY25. Our profit after tax for H1 FY25 rose to 66 crores compared to 65 crores in FY24. Our IoT-led business, the EBITDA margin improved significantly, rising from 7% to 14% during the same period. We are on track for achieving our goals of fiscal year FY27-28, which we have shared with all of you last year. Now, I would like to introduce Sapna Ahuja, who is the COO of MapMyIndia. Today, this is part of our desire to keep changing between myself and Rohan Verma as one of us and the other one from the senior leadership, so that you get more exposure to our management team. Over to Sapna.
Thank you, Mr. Verma, and good evening, everyone. So, as we reflect on our performance in Q2 FY25, it is clear that while the overall market we serve faced some challenges, but we were able to perform reasonably well, thanks to our open orders and, most importantly, our incredible teamwork. To give you some perspective, in the first half of FY25, our automotive and mobility tech revenue saw an increase of 19.3% year-on-year, and our C&D revenue grew by 8.2%. More specifically, in Q2 alone, A&M revenue jumped 27%, reaching INR 60.9 crores year-on-year, while C&D revenue held steady at 42.7 crores. So, over the past several quarters, we have worked hard to expand our reach and establish ourselves in the international markets. A key milestone in this journey was securing a significant win with PT TerraLink Technologies in Southeast Asia for map solutions. We successfully acquired new customers and deepened our relationships with existing clients through upselling and cross-selling. This included significant wins and go-lives across various sectors, including automotive, fleet management, tech startups, traditional corporate, government entities, and defense. Our diverse range of solutions saw further increased adoption, such as our ADAS and EV mobility stacks, video telematics for fleets, APIs and SDKs for app developers and enterprises, and geospatial solutions like 3D digital twin mapping. Now, moving specifically into the automotive and mobility tech business, we saw new wins across two-wheeler, four-wheeler, and commercial vehicle OEMs, so further solidifying our position in the industry. Some of our major go-lives, including high-profile models such as Hyundai Alcazar, Hyundai Creta, Kia Carnival, Kia EV9, Mahindra Thar Roxx, Mahindra CXO. We also saw success with Ather, Ista, and JCB. That's where we entered into the commercial utility vehicle space. In terms of fleet management, we secured major wins, including monitoring vehicles for an electronic major, brake tracking for cement company, and video telematics for auto carriers, and the transportation of heavy equipment. Additionally, we achieved a significant milestone with the go-live of the Maharashtra State AIS 140 backend, which will provide safety and emergency response solutions for all commercial use vehicles in the state. Coming to our C&D business, we saw multiple wins in the e-commerce, QSR, delivery and mobility sectors, where our APIs were utilized for a variety of use cases, such as location-based applications, personalization, and accurate address capture to improve delivery efficiency. In the pharma and retail sector, we secured key wins in analytics use cases. These included business expansion planning, retail strategy, workforce automation, and customer location analytics. In BFSI also, we made significant progress. Additionally, we secured key government wins, including transit and route mapping to support metro rail development in a capital city, GI solutions for the Clean Ganga mission, land records modernization for a state government, and of course, the adoption, as Mr. Verma also mentioned, the adoption of our consumer products continued to rise steadily. I think that's an overview from my end.
Thank you, Sapna. I think now, Anmol, you can take it forward.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for the moment while the question queue assembles. The first question is from the line of Anmol Garg from DAM Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Couple of questions. Firstly, so what has led to a sharp decline in the CNE business during this quarter? Is this just quarterly lumpiness or there has been any structural changes? And also, I mean, do you expect the CNE revenue to come back in the coming quarters?
Answer is yes to both.
Right, sir. So, sir, by what extent do we expect this revenue to come back? Do we expect this revenue to come back to Q1 levels in Q3?
See, every quarter there is something special. So going by this quarter by quarter itself is a challenge for us. We are building business for a long term, 3 to 5 years on one side. The lowest denominator for our business, we say, is year. So this quarter on quarter, I feel, we are not in a position to give you clarity that this quarter what will happen, next quarter what will happen. It's a B2B business, okay? And we have an open order book, which Sapna talked about, and that order book is quite healthy. And part of that order book may happen in Q4, some of them might happen in Q3, some of them might happen in Q2, some of that might happen in Q1. It is all customer defined.
Right, sir. Understood that. Sir, we don't expect any impact of Google in our CNE business, right?
No, there's no impact. If you are answering a very straight question, the answer is straight, no.
Understood. Secondly, sir, if you can talk about the JV that you have signed with Hyundai. Now, will it provide maps to only Hyundai cars, or will it be open to other OEMs as well? And what kind of revenue can we expect from this JV going ahead in FY26?
Okay, I think if you see the presentation that we have shared with all of you, there is a page on that which talks about the foray into international markets. Okay, so this is the first time in the history of MapMyIndia where we have entered the international market. We have international customers, many of them, 8 or 10 or 12 like that, but they are meant for the domestic market. This is the first time, and that's what we feel proud. And it has been a hard work of last 12 months. Our strategy has been always how to optimize our costs. Entering an international market, and at least I am aware of many companies of our sizes, how difficult it has been for them and how much money they have burned. Think about this, our model in which we have successfully joined hands with Hyundai, whereby our cost was not, or hardly, put it that way, other than travel related or some time here and there. Now this JV has been formed with Hyundai, keeping in mind, first, Hyundai Kia itself has a captive, JV will have a captive customer of Hyundai Kia cars for the Southeast Asian countries, and that is what the JV will get straight benefit from a captive customer. What I mean by that is, because of the captive customer, they will start earning revenue right away. Otherwise, when you build an international market, you know what you get into. The model, to the extent I can talk about today, and as the time goes by, we can explain more and more. The revenue, ultimately what will happen, we will get some part of the profit from JV to our bottom line, and JV will outsource the map related activities to MapMyIndia, which will be a service we will provide. The other partner, Hyundai AutoEver, is a software company. Then further what it will do is, all these, I'm talking first about the automotive customers. All these automotive OEMs who we service in India for Indian market, there will be an upsell to them about the Southeast Asian markets also. Whoever in India sells to Southeast Asia, the automotive OEMs, will be able to offer them an additional solution for that market, and that will add further revenue for MapMy India. It's not limited to automotive OEMs. Even the large C&E companies which we have, whether e-commerce companies or otherwise, or examples like Apple's and others of similar kind, we will also look forward to offering them beyond India maps to them through the JV. So there is a huge opportunity. We can't predict revenue from exactly, but as the time goes by, things will fall in place, and you will start hearing the wins over there, and then you will know what kind of revenue we are getting. So we are very excited. We feel that this is a big change that this JV will bring to us, and with a big brother. I call Hyundai as a big brother for us. We are entering the Southeast Asian markets first through JV, and then JV will, in future, as of now, has planned to move to the MEA, Middle East and African market too. This is our strategy going through the JV formation. Did I answer?
Yes, sir. So just one follow-up on this. Given that we have 40% stake in this JV, this will only add to our bottom line, but not on the top line, right?
I told you that. But two more things I said. Let me repeat it for your benefit, because it's a very interesting model. One is the JV will outsource for many other countries where they will partner with the local companies, but the local companies can provide the maps to the JV. However, the processing of that maps, JV will be outsourcing to MapMy India. That's one revenue model. The second revenue model I said about example like whether in the C&E or the automotive OEMs in India who are our customers, we'll be giving them our solution to those companies, and that will be a revenue model for MapMy India. So it is not just the profit that we'll accumulate in our bottom line. The other two I just told you will hit our top line itself.
Understood. And just one last thing from my end before I join back in the queue, is that if you look at our 1H growth, it has been at around 14% or so. So are we confident of achieving very strong growth in second half so that we can be above 30% kind of growth, which will be required for achieving our guidance of 1,000 crores revenue by 27-28?
Guided, I have made in my commentary, I wrote my last line was that only, that we are pretty comfortable today with achieving our FY27-28 goal.
Understood.
Few things to happen, and what has happened today already, the JV, that is a sign for that.
Sure, sir. Understood. I'll join back in the queue. Thank you so much, sir, for answering my questions.
Thank you. The next question is from the line of Chandra Moli from Goldman Sachs. Please go ahead.
Good evening, and thank you for taking my questions. My first question is just trying to understand the cost movement this quarter. You mentioned that you have made a lot of investment for the long-term growth of the business this quarter. So it looks like there's a big pickup in raw material costs because of the IoT hardware business. G2P has been fully funded. So just trying to understand, this seems to be since we went public, since we've been getting your disclosures, financial disclosures. The first quarter where we've had YOY growth in top line, but YOY decline in EBITDA. So just trying to understand the factors within the gross margin and also the factors around the investments you've taken in the fixed costs. and how to think about, run rates around profitability going forward. We're used to a 40% plus margin journey, but going forward, as we chase growth, where we should expect profitability for the company to settle out.
Okay. Let me address it in a very simple way. If we had been doing only map business, B2B, probably our profitability, EBITDA, you could have seen it rising to 60%, 70%. But it would not have helped us with the revenue growth target that we have tried to put on ourselves, 1,000 crore in FY27-28. So now, when you try to grow faster and you try to grow using other methods, allied businesses, there will be where that expense will be shared from the profitability of that map data business. So let's first talk about the IoT business itself. If I remove IoT business, you know how much the EBITDA will become, percentage-wise. Margin percentage-wise, not margin absolute rupees-wise. Does that mean that we don't do IoT business? The answer is no. We better do it and keep doing it, because it is one of the second pillar of our business. The third, drone. That's the third pillar. Will it not require investment? Issue really is all these investments lead to booking it as an expense. They do not allow, accounting standards do not allow us to capitalize them. Now the fourth category, consumer business. From nowhere, in the last 2 years, and particularly last 1 year, we have reached from 10 million to 25 million downloads. That 25, if you ask me, as of today, that number is almost like 28 million. How do we achieve? How are we doing it? Don't you think we are spending money in two parts? One is some sort of advertising to achieve, either some sort of marketing expense and some sort of expenses on the cloud, because these free apps do require cloud usage, which means a cloud expense. Now again, the choice is ours. Choice could be ours, not choice is ours. Choice could be ours that we don't get into this consumer side. If that is the choice we want to follow, do you think, we don't think, I'm not asking you, I'm telling myself, we don't think we are doing a good business. From nowhere to 28 million as of today, if we are able to achieve one day, and I'm not giving you the time frame, 100 million, can you imagine the impact of that would be on our overall business? So here is the dilemma. And here, this dilemma we tried to address in board meeting today. I can share that. And we had a 1.5 hour long discussion. And the board felt very comfortable and they said, go ahead with, you have the cash in your company, you go ahead with it and do your best to see that the consumer Mappls app grows as fast as possible. So the answer that the statement that you made, since listing our EBITDA has fallen, yes, it is for the future. We are not. We are trying to do. We are trying to do everything that will help us in FY27-28 and beyond that. And we are building a business.
Got it. That's helpful. Just as a follow-up to that, just trying to understand, will you be able to, I think last quarter you had sized out, how there was an increase in surveying expenses and outsourcing expenses. So just want to understand, will you be able to size out, I think, the 3 or 4 meaningful investments you've made, just for us to understand, what is the size of the investment you're making that you are actually taking the hit on the P&L?
You mean investments in other companies? Is that what your question is?
No, I think the investments that you're making in the consumer business, the drone business, the IoT business, all those 3 to 4 long-term pillars on which you're making investments, if you're able to size out, what the investment we made maybe in crores this quarter.
I can tell you. The consumer, I just said, that having spent as an expense a 5 crore rupees this quarter has led to a jump to 28 or 25 million consumers download. Okay? So that's an investment. Investment could be either capitalized or it could be expensed. We are expensing them, not capitalizing them. The second part, in IoT, you can see the trend. IoT, from a negative EBITDA when we started, it has risen to almost 12% or 14%, something like that. 14%. Okay? So the investment they are making is in terms of pushing hardware devices into the market so that we get SaaS revenue. And that pushing that SaaS, I've just observed, I don't know how much correct I am, but I've observed that some of the companies are not showing it under the sale of a revenue this way. They are showing revenue of devices as subscription and the cost of devices as marketing expense. I mean, this is what in the telematics business I'm observing that, but that doesn't matter. We are just showing the way it is. So that's an investment. Drone. We have manufactured 5 drones already, giving the 3 drones for government certification. This is on one side to make sure that we have our in-house capability for drone, so that the drones can be made in the manner a customer's requirement may be, instead of shopping around in this market. And the second part is we have done a couple of work already with both government and non-government customers, where we have started providing drone as a service, which has reflected into the revenue. This is the best answer I can give you, Molly.
Got it. That's helpful. And just last question is around the Hyundai Kia contract. Congratulations on the ramp up there. So just want to understand versus the business that we've been doing on Hyundai Kia over the past 5 to 10 years. Could you just tell us this new contract, what is maybe the incremental business? Is it 5 crores per quarter, 10 crores per quarter? Just trying to understand that as we get the first full quarter benefit next quarter on this.
The two are independent. We have a direct contract which we shared worth around close to 400 crores contract over 5 years. I think we have already shared that in the last quarter earnings call. Okay? It has nothing to do with JV. So that if you take 400 crores over 5 years, it's an 80 crore year. If you further want to just do a simple math, it's a 20 crore per quarter on an average. So that answers your question on that?
I'm just trying to understand the 20 crore per quarter. What was this?
An average, because some quarter it will be more, some quarter it will be less. 400 crores also I divided by 5 to say that it is 80 crores a year. Okay?
So I think this last clarification on this. I'm keeping the JV aside, just looking at the existing Hyundai Kia domestic business, the 400 crore business.
This is the Hyundai Kia domestic business I'm talking about for us. Nothing to do with JV.
Correct. So just trying to understand, before the domestic contract was announced, this 400 crores, the old Hyundai Kia business that we had, was that at a 5 crore per quarter, 10 crore per quarter run rate, and now we have 20 crore per quarter? I'm just trying to understand that change.
Is 10? I'm asking Sapna. Okay, so it was around 5-6 crores a quarter.
And that's jumping to 20 on average.
Yeah, but this has started only from September. The revenue has started only from September, remember. We had expected earlier that it will start from April. it got delayed, but finally it has started from September.
Got it. That's helpful. Thank you very much and all the best.
Thank you. The next question is from the line of Vimal Jamnadas Kohli from Alchemy Capital Management. Please go ahead.
Yeah, thanks for the opportunity, sir. But I do understand you have already mentioned the slowdown in the reasons behind the slowdown in the consumer tech. But sir, even if and we do understand the prerogative that this business cannot be looked at on a Q-on-Q basis. But even on a 2-year CAGR basis, if I were to look at the growth has fallen down to 7% on a 2-year CAGR basis for this particular piece. So if you can we have highlighted in the presentation that there were certain challenges. If you can highlight what exactly are those challenges that we faced. Is it that the use cases that should be increasing are probably slowing down? Maybe because the customers are taking a bit more time. So what exactly is happening there? And on the market expenses, on the margins, over the last 4 quarters, we've spent about 15 to 16 crores on marketing. So we've already been doing that expense over a period of time.
No. I don't think your numbers are not right. We have not been doing 15 crores.
No, I'm talking cumulatively, sir.
No, I'm talking about the whole year also. It was not 15 crores last year. I can tell you right now. Anuj, how much? I can tell you it was not 15 crores even for the whole year last year.
So, the point that I was trying to make over here is that given the fact that we've been spending
for the full year, it was 9, and this year it is already close to 7 in half year.
Yeah. So we've been the spending intensity is already has been high historically. So what has transpired now that the spending has to accelerate, and will it directly have a positive impact on the C&E segment?
No.
Will it help it grow better?
This advertising or marketing expense is to do with the consumer app. I don't think our marketing spend for C&E or A&M is a lot. It might not be more than making a guess, may not be more than 3 crores in a year.
Okay. So, sir, with on the consumer app, what are the long-term plans for monetization?
The standard, as you know, there are several ways. A lot of things come out. Like people had been asking, what are the long-term plans for maps? So, the consumer app first understand. We are sitting with a unique asset. No single Indian company has an app like Mapple's app or Google Maps. No Indian company has it. Now, when you think about it, we are the leader in the country. Ignore Google for a minute, and we are the challengers to Google. And in spite of that, challenging a monolith Google, we have reached 28 million downloads. So what is the advantage Google is getting from that 100 million if they have approximately? I'm giving you a number. Aren't they getting a lot of advantages because of that? So the impact, if you are trying to get very specific, the impact could be on potential advertisement revenue. Impact would be on more people liking our APIs because they will be convinced that our APIs are much better. Impact could be on automotive companies where they will see that Mapple's app is so popular. So like that, it is a product, an asset that changes the people's behavior towards a brand and people's behavior towards accepting their products.
Right, sir. And sir, if you can answer the question around the consumer tech slowdown.
No, there's no slowdown.
Highlighted.
There's no slowdown. I said it in the beginning, I don't go by quarter.
No, sir. I'm talking on a 2-year CAGR basis. Our revenue growth is about 7%. Now that clearly does not do justice to the potential that we have and what we have done historically. So if you can just maybe, and even in the presentation you highlighted that there were certain challenges in the markets that we operate. If you can just put some more light on what exactly were those challenges which led to this decline.
Last quarter the challenges were simple. Just a second, give me. It's not 7%. Please do your maths a bit. You will find it out. Okay? But anyway, I'm not challenging your numbers. The challenges we talked about in the market, I hope you guys know better than me or us as a team, what was the result of the Q2 for most of these corporate worlds in general. If you look at the Q2 results for the corporate world. Definitely it was not very good. None. This is my impression. So when the results of the customers we service, that they are aware of what is impacting them, so there can be some slowdown that can get transferred to us also. That's what we have tried to write in our commentary. But it was not 7%. I think just do the calculation again, you will understand.
All right, sir. Thank you so much. All the best.
Thank you. The next question is from the line of Abhishek Kumar from JM Financial. Please go ahead.
Yeah, hi, good evening. Question again, sorry to harp on, the growth performance. I just first want to understand, first half.
So can you speak a little louder, sir?
Yeah, just a second. Let me transfer to it. Hello, is this better?
Mm-hmm.
Yeah. Just wanted to again harp on the growth that we have seen. Clearly, the growth was slightly below what the street was expecting. 13.5% growth in the first half, year over year. Is this as per your own initial expectation, or has it disappointed you also?
Okay, I think you have a good question. Actually, honestly speaking, we don't care whether it is a C&E or A&M. We just don't care. We care for what is our total business happening. I'm talking about even in the short term, quarter by quarter also. We look at the total picture. It may happen that in a particular quarter, A&M might show a big jump, and in some quarters, C&E might show a big jump. I mean, I'm not predicting or I'm not giving you any guidance, but if you see a big jump in Q4 for C&E, don't be surprised.
Okay. No, that's very clear. The only question why maybe so many participants have asked this is, we have a very strong conviction in our FY27-28 guidance of 1,000 crores. But the first half, we are, tracking much below the required rate. Is it? I mean, it's difficult to understand, right? If there is a slowdown near term, but we have a conviction which is 5 years out.
Okay, I'll help you on that.
Yeah.
Last year, probably you attended our investor conference, correct? And we gave this guidance of 1,000 crores in 27-28. That's also correct?
Yeah.
The people like you did a backward calculation and said that every year it has to happen like this. That's also correct? Did we even know that a JV is in the offing? Did we even know that we are going to reach the international market? Now, in the last 1 year, good amount of focus on the management was couple of things for the future. And the future was, how do we enter the international market? What do we do with our consumer business? How do we efficiently operationalize IoT business? What do we do with drones? Now, if the impact of all that total in some quarters fall below your street expectation, if I may call, then if you are a long-term investor or an analyst looking at a long-term perspective, please consider these factors.
No, fair enough. Just that the current growth is significantly below the ask rate. So that's why the concern. But I take the point. The second question is, I just want to understand maybe, the construct of our order book, right? We give fixed pricing and we give volume projections. And when there is a slowdown, maybe in C&E business, but such a sharp slowdown in one particular quarter, is it my understanding is it's the fixed price contract which gets pushed out, or maybe
that doesn't get pushed out. Actually, as of today's order booking, if I can see, I find that Q1 and Q4 have much more weightage towards the fixed pricing, if you're trying to understand.
Okay, maybe I didn't really get it. How is it? Are there milestones which happen in Q1 and Q4?
Yes. That's exactly right. I'm talking about as of today's prevailing open orders. Next year it might change, and so I'm making a very guarded statement that as of current order books, the fixed prices in C&E are more leaning towards Q1 and Q4.
Understood. Okay, understood. My last question is on margins. So I think we have maintained earlier that 40% medium-term margin is what we aspire.
No, I don't agree. Last year we had given the guidance on margin, not for this year. Because this year, to tell you the truth, we have been ourselves debating that how far do we move with the consumer business? Because if we do with the consumer business, it is an investment which is in the form of expense. And hence we try to shy away from giving you any guidance for EBITDA for this financial year.
Okay, sure. So the current level is what we should factor in for the rest of this year.
No, I think you should look at the current level is one way, and you should look at what the great things have happened of the JV which builds the future and the consumer business that will build the future. I think you consider both together, not just a hard-wired pack for this quarter and extrapolate that. I won't if I'm an investor.
Got it. Thank you, sir, and all the best.
Thank you. The next question is from the line of Purushottam from VWITS. Please go ahead.
Hello.
Yeah.
Am I audible?
Yes.
Thank you, Rakesh sir. First of all, let me introduce myself quickly. So my name is Purushottam, and I am a proud retail investor in MapMy India. So this is the first time I am attending this conference call, and thank you for the opportunity given to me for asking the question. So yeah, I will not ask for multiple questions. So I can understand that the ups and downs take place in the market and in the business also. So this quarter is not that much bad that everyone should start firing. So my question, straightforward question to you, we as a MapMy India are doing the business in different segments, like selling of the maps and services into the dash as well, and we have set up another company like ClarityX for analytical solutions. So considering all these aspects, so my question to is what MapMy India can do in the longer term, like 7 to 10 years from here. I'm not worried about the short term of 3 years. I'm pretty much confident on you. The revenue, the guidance you have given, that I'm confident that we will fulfill that guidance. But I'm from a retail investor perspective, I'm thinking a bit above of a larger broad range. So can you please enlighten me if it is possible to give me picture like where we can push ourselves in the next 7 to 10 years of range? Thank you, sir, in advance for answering the question.
Thanks for encouraging. I hope you you know that we are a technology company. I hope that's clear, right?
Yes. And I have a very good.
We are sitting with a unique asset, maps.
Yes.
A technology company trying to say that what will happen in 7 to 10 years is a good, I mean, it should be addressed. All that I can say that safely, if we continue to be a technology company, if I'm saying, and there's no reason not to believe that, because for 25 years we have been a technology company. So if a technology company's path while moving forward also keeps getting adjusted depending upon, now you hear all this AI so much. Now, very interestingly, we have been using AI for last 5 years in our own company for our maps or analytics or so many things. But the interesting part is the AI companies will need us, and they are the potential customers for us. Now, don't ask me how, but I'm giving you a heads up. So, as the technology world is moving, the opportunities for MapMindia on one side to use or develop technologies for that, as well as the use cases for our maps and IoT and others also gets increased. The only statement I can simply make is we are proud that we have been in existence for 25 years so nicely, and we are proud that we feel very strongly that the next 25 years will also be there. When worldwide the mapping companies got torn and they vanished after the arrival of Google, and here we are giving them a real good time.
Yeah. Okay, sir. Thank you. That's it from me.
Thank you. The next question is from the line of Sobit Singhal from Anand Rathi. Please go ahead.
Yeah, thank you. So, on the B2C side, what I see is that we are building two use cases. First is the travel commerce and the daily needs Maple Small. So how is the revenue share over here, and are we doing on something like on per booking basis, or and on the travel also? I was saying that we are giving some discounts as well. So how is the transaction happening over here? Just wanted to understand.
Okay. Let me put it slightly differently. First is our goal is to take the Mappls app from 27 million to an unknown millions of our consumer base. The other things that you are talking about are more R&D kind of a thing. Okay? So saying what is the transaction base, how the car rental, what kind of revenue we are sharing, or how much in the Mappls Mall we are sharing, or how much in the Mappls Travel we are sharing. These are not the things that we are talking about today. I think we'll talk about it a year later, not before a year.
Okay. So, but just wanted to understand what exactly are we trying to do on our B2C side?
B2C?
We are building, B2C, the Mappls app. So we are building the travel commerce. Now I can see Mappls Mall. And so how is the opportunity size, or how big is the opportunity size are we looking at going forward?
You know what? An entrepreneur or a company like ours experiment publicly to see what's happening. But our goal right now for the next 1 year is to focus on increasing the Mappls app downloads. The other things are on the side, people are experimenting with, and good things will come out of it.
Okay. Thank you, sir.
So there could be, like in-app advertising, The Mappers gadgets are there, which can go on an online subscription, commission income from travel expenses. These are some of the ways that consumer business can think of monetizing the Mappers app.
Understood. Thank you.
Thank you. The next question is from the line of Samir Dasani from ICICI. Please go ahead.
Yes, thanks for the opportunity. Am I audible?
Yeah, you are.
Sir, so typically we see stronger H2 in CME segment. So should we expect basis the order book that H2 should be stronger? And is my understanding correct that H2, this CME is a higher margin business. So
I think the voice is quite distorted.
Okay. Am I audible, sir?
You are audible, but the voice is very distorted.
The next question is from the line of Deepak from Sundaram Mutual Fund. Please go ahead.
Yeah, am I audible?
Yes.
Yeah. Sir, my question revolves around this JV which you have announced with Hyundai AutoEver. So, sir, in India, it took us considerable time to build this map business with kind of detailing and precision we have on the routes. Now we are trying to replicate the same in a foreign geography, right, with this JV partner. And you have also indicated that in FY26 you will start to rake in the revenues. So I was just thinking, would it be possible for you to quickly scale up that JV, given that the Indian business has taken so long to kind of achieve that level of proficiency? Is it that the JV partner is bringing on something onto the table for us to ramp up that quickly?
The last part you said is right. And the first part also you said is really correct. There is no way we can ramp up building maps of so many countries ourselves. We believe it's not possible too. But this is just like we never believed, and hence we never went to the international market thinking that we can create business in the international market on our own. But part one, think about Hyundai Kia has their cars all across the world, right? And by mixing or doing a combination between our Hyundai as a partner, we as a partner, we are a map specialist. And the third element of engaging local agencies is what is the underlying strategy to build the maps.
Okay, got it. So
and Hyundai brings technology and customer access. We bring map building experience.
Okay, so data will be sourced through this local partners or local agency, as you call it, and using your tech, you will develop what we have in India right now. And the technological part, some would be assisted by Hyundai.
More from the software side, Hyundai will bring in, because Hyundai AutoEver is primarily a software company, whereas the mapping technology we will bring in.
Okay. And sir, could you please elaborate this $4 million which you have outlined? Means since when will we start investing this, and exactly where these investments will be around this 32 odd crore number, $4 million?
It will go to JV. Hyundai AutoEver will bring in $6 million, making a total capital of $10 million. That will be with the JV, and then JV will be spending that amount.
Okay, sir.
And we will start, we will invest it, I will say, probably this month itself.
Okay, so the investment will start from this month. And sir, can you just elaborate this, where these investments are, means what is the outcome of this investment of this 10 million that we are trying to achieve?
The outcome is JV will build a business. The business will be built by JV, with a strong participation between Hyundai and MapMyIndia. JV will, in the beginning I probably explained something, the model, that JV will have the maps from the local partners. MapMyIndia will process it with the technology, and Hyundai software and the maps will together be given to those auto OEMs where Hyundai software is acceptable. If they want the MapMyIndia navigation software, they will take MapMyIndia software. Where they don't, end customers like, BYD or XYZ. The interesting thing is many of them in India, MG, BYD, they are using our software. So that will generate the revenue for us. Then further, if the end customer likes somebody else's software, they can the JV will supply that also. But it is not only for auto EM. Let me repeat. This JV business or the maps that the JV will have can be given to many of the C&E customers of MapMyIndia today or otherwise.
Understood. So basically the source code or the map development phase is where our capability is, but on the front end, it is the Hyundai AutoCare software, which the client will see or the user will see as a user interface.
Maybe.
Primarily for Hyundai Kia vehicles.
Primarily for Hyundai Kia vehicles, they will see Hyundai AutoEver software. But for example, let's say BYD, as an example, they might see our software.
Got it. But sir, then wouldn't there be an conflict of interest? Because then let's say if BYD uses your software and you have AutoEver also using their own software, and then you're competing against each other, right?
No, we'll not be. How will we competing? Tell me, I didn't understand that.
Just now you explained in BYD the software can be something else apart from Hyundai AutoCare, right? AutoEver. So if that software is kind of provided by us, then aren't we kind of
provided by us to JV?
Through the JV.
Right.
Okay, then
we will not operate independently. Hyundai AutoEver will not operate independently. Both of us have to pool in our technologies, our resources, and money is already pooled in. And the end customer will be a customer of JV.
Okay. Got it, sir. Thank you for all the clarifications. All the best.
Thank you. The last question is from the line of Samir Dasani from ICICI. Please go ahead.
So thanks for the opportunity. Sir, E&E segment, should we expect normal seasonality? Like H2 is always heavy. So should we expect H2 to be heavier for CME segment? That is one question. Second, how should I think of the margins? Like obviously now we are at 36-37% EBITDA margin. Should we think this is the new level of EBITDA margin for us, or should we expect this margins to recover in H2, or when do we expect this to recover?
Yes, H2 is heavy. That I can certainly say. Margin I would never like to comment because we have not given the guidance for the margin at all for this financial year.
So this
our H1 margin is 39.3%. Okay.
Correct.
Right. Which is close to what many of you believe that we have given you guidance of 40%, right?
Okay.
So it is very close to that.
Okay, so H2 obviously with revenue growth we should see that. And that's my assumption. Now on Hyundai Kia, should we think that JV's margins would be higher than our own company level margin because we don't have to do SLM, right? We don't have to do sales, marketing, etc. So how should I think of the margins of JV?
JV's margin, I'm not looking at it. That is JV management.
Okay. Got it. And just one clarification. So festive season sales in auto is already covered in Q2 numbers, or it is something which we get in Q3 normally?
Sorry, your voice is not clear. Can you please ask your question again?
So basically on an OEM level, there is a stocking of vehicles for the festive season, right? That's a higher volume quarter. So is it already captured in Q3 or is it already captured in Q2 or will it come in Q3 for us?
See, this festive rise in volumes, that's typically spread between Q2 and Q3.
Okay.
Yeah.
Okay. Thanks. That's it. Thank you.
Thank you. As that was the last question for the day, I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you for listening to us, and I really appreciate all the different questions that came up. And we are excited to say that there's something always a game changer. That game changer has happened right now with this joint venture. I hope there can be more game changers. If we are able to change this 28 million consumers to 100 million consumers, that will be another big game changer. Like that, from time to time, you will see the game changers, and some of the game changers might have an impact, or the benefit that we might get is immediate. Some of the game changers, you will see the benefit will come later. But overall, when we look at 3 to 5 years, I'm not talking about 27, 28, we always have a time horizon of 3 to 5 years when we do any serious thing for the future. Not 7 years, but 3 to 5 years is always our time horizon, and we work towards that goal. So, if you believe what we are doing, including the consumer thing, then please be rest assured we are going on a right track. It's not the EBITDA, it's not the PAT. They are a byproduct of when you do good business. Thank you so much.
Thank you. On behalf of DAM Capital Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.